We're going to be discussing the essential skills of an investor relations associate for multifamily syndications. And the reason why I wanted to talk about this is as the time is, as you know, in the past year, deal flow has been very slow. And typically during times like these, it is essential to build up and really just create your systems for your team while there's just not a lot of action going on, and just honing in on your systems and your structure. And so if whether you are looking to hire a new investor relations associate or you're looking to be one yourself, I think there could be some golden nuggets here throughout. And so what we are going to talk about is sort of just my process, just from start to finish, of what skill sets and expectations were for me coming into the position, the hiring and onboarding process, so what the interview process looks like, and then how long it took for me to ramp up and officially get confidence in getting on these calls, and then being investors' main points of contact. And then also some of the ways that I was able to learn how to communicate investment opportunities to several different types of investors, whether they're newer investors, sophisticated investors, or even if they were on the institutional side. What were some of those resources that I used in order to articulate and have conversations with several different folks. But first, background, a little bit about myself. As you know, I am Taylor Koo, and I'm one of the investor relations associates here at passiveinvesting.com. And so I've been here for a little over 2 years. I think I've had definitely, I want to say it's been over 400 calls, and roughly raised around 20 million since I've been here. So it's been quite a journey, and even raising during this time, it's been difficult. But I think even during times like these, it is essential to make sure that you're able to communicate exactly what's going on. Now, just to start off, I actually brought up the job description from the investor relations role. And this job description was posted on LinkedIn. And as you can see here, you have your responsibilities. And then over here on the right side, you had requirements. So take a little bit to read through this, but I'll actually give some more background on myself when I applied for this position. And if we're going to be looking over here on the requirements, I did not have a bachelor's degree in marketing finance or another business related field. I was a mechanical engineer. I didn't have anything there. I did not have 3 to 5 years of investor relations and experience in real estate or something equivalent. I was an engineer. I was not. But at the time when I was applying, I did investor relations for about a month with a smaller firm, and that started from a podcast. So I was somewhat familiar, and I was branching out my network for about, I think, 8 to 9 months at the time when I actually applied. And funny enough, it was the firm that sent me this job posting just to see if it can help, because they were looking for somebody in the Bay Area. And so I said, hey, why not? I might as well just apply. And the reason why I say this is because although the job description said all of this, there are a few main points that really popped out that now I see in my day-to-day of just what I do all the time, of just the essentials to what, and the essentials of what I actually do, and the skill set that they're actually going to have. So over here, I highlighted the 3 of them. So key responsibilities: speak with anybody that's coming in, whether they're newer, whether they're a referral. I am speaking, well, it's me and my counterpart. We're speaking to anybody that's introduced to our platform. And oftentimes, I wouldn't say this is necessarily their first impression with us, but this is their first conversation with us. And so I'm the person that is talking to them about the business model, our market, the markets that we're investing in, our strategy. I'm also in charge of just following up with investors, whether they're in current deals with us or they're just looking and learning and they're just trying to stay warm, and then also cultivating these relationships on a local basis as well, whether that's through meetups, conferences, dinners, networking events. And those three are what I mainly do all the time. Now, in terms of requirements, I mean, as I mentioned, I didn't have any of these. I didn't have a lot of these other ones, but I highlighted these three ones because I think these are the three most important ones, especially when it came to, uh, when it came to hiring for an IR associate, making sure that you understand what you're actually talking about, understanding the deal, understanding the terminology, uh, and understanding how these deals are structured, and then also making sure you're very people forward, because this job is just a lot of building relationships. It's a lot of communication. There are times where you're going to be on a call for 15 minutes. There's going to be times we're going to be on a call for about an hour. And so I mean, essentially, the person that you're going to want to have as an IR associate needs to enjoy talking to other people, and people should have a good feeling when they are talking to them too. Uh, but something that's key here, though, is the fact that I didn't have. So some more background on the actual LinkedIn job posting. There were actually three. My former director, he said there was over 300 applicants with way better resumes than me. They had way better LinkedIn profiles than me. And I like to think that it was just because I was a lot more handsome than all the other ones. But in reality, it was actually because in their mind, and I guess in our minds now, in passiveinvesting.com's mind, it was easier to train somebody from the ground up that just had a basic foundation and to become the product that they want, instead of having to detrain somebody that's say coming from an institutional background and then retraining them to be the products that they want. And so with that with that mindset and framework in mind, that's actually how we sort of walked through the interview process as well. And so when we got down to got to the hiring process. So there was that LinkedIn job posting. The first thing that I took was a personality test. I think it was the way, we don't use it now, but at the time we used this. I want to say it's like Wonder Share. It was some personality test that was supposed to fit. It asked you a number of questions. It wasn't even real estate related, but it was it was a it, it was just, I don't know. It just asked a lot of just different questions, just trying to get to know who you were as a person, whether you are analytical, whether you are outgoing, and ask you all these different scenarios. And so that was one part of just the weeding out process to see if it actually fit with the culture of what's passiveinvesting.com was doing. And then if you did, let's say, get past a certain score and the personality fit the work culture, then we moved to the first round of the interviews. Now, the first interview, I mean, it was the basics. It was really just, hey, tell me a little bit about yourself. Why are you interested in doing this? Talk about your background, talk about, some of the obstacles that you've gone through, just all normal interview questions. And so I don't want to dive too much into that because I feel like that is simple. But the second round of interviews, I think, is where you can really start to weed out some of the people. I'm talking like I was the one that was recruiting, but I mean, but in reality, though, I understand why they did this. So in the second round of the interviews, they took a previous deal that they had. They wanted us to pitch the actual deal. So somebody was to come in and they were going to ask about the deal, and it was up to me to interpret how I wanted to present the deal. So what is the actual story of the deal? And then even after pitching the deal, my former boss would ask me questions. And these were typically common questions that would come up where, I think he asked about like cap rates. He asked about, well, why are you doing this? And why are you in this market? And I mean, and to be quite honest, I don't think I actually did the best job in pitching this previous deal. I think I got to it to a certain point. I mean, I knew enough, but I went very much so into the terminology. But I remember being in the middle of me present or of him asking me the question. I literally told him that I don't know and I would love to know the answer to that. And I think just having that yearning to learn more and then adapt and then re-articulate what I was saying or what he was saying, what he was thinking, really just highlighted just me to be able to adapt and learn a bunch of different deals. Because I mean, when I don't know what deal flow looks like for several other operators, but when time does come, I mean it's and deals start to come in and flow at a high rate. I mean, the IR associate needs to be able to break down the deal, tell the story, and learn about the deal and learn the essentials of the deal in a very quick manner because want to send it to your VIPs before you send it out to your entire investor network, and people are going to be asking you about the deal, and you just have to know your stuff, right? So this really highlights how much preparation that they did, their actual knowledge, and then also if they didn't know something, are they going to try and lie and fake it and over pitch you? So I really liked this exercise. The next one, presenting a plan to prospect and cultivate investor relationships. So you go through a presentation, and this, I think, really just highlights if this person is a go-getter. Does this person want to go out and find new investors, and how are they going to do it and how they envision it, and then you can see if it aligns with your vision as well for the IR role. Let's see, onboarding. Now moving to the onboarding process. So I got in. Woo. Now I had my in-person training, so I went to go to Columbia, South Carolina, met the team, and so some background behind this onboarding process. I mean, there's so much to go through. I tried to make it as simple and efficient as possible, while also giving y'all enough info and resources just to start off from, and then you can tweak it as you go if you are, hiring someone or if you're learning this on your own. So, went to Columbia, South Carolina, met the team, met the partners, and sort of learned about just the rest of the team and how all of these team members put the pieces of the puzzle together. And then we went down to the fundamentals. So the fundamentals, I mean, it's essentially the pitch of who we are. So it's like who we are, the managing partners and their background, how did they get started in it, the asset classes we're diversified in, the business model, whether you're going after C class or B class assets or even suburban class A assets, storage units, whatever, why those types of assets, and what are we doing there? Is this a traditional value add, or is this more of like a lease up type of deal? And then you also learn about the markets that you're currently investing in and why. And, if you're in several different markets, so like, for example, I mean, we're currently still focused on the Sun Belt Southeast, which covers North Carolina, South Carolina, Florida, Georgia, Texas, Alabama, Tennessee, and Denver, Colorado. And you don't necessarily need to know. I mean, of course, when the deal comes out, you definitely need to know the market and then be able to speak to that and why it's a favorable market. But the answers that we had for the markets and why we choose them is just three things we always look for: population growth that doubles the national average, a strong diversification of employers so that we are not dependent on just one industry, and then we're also focused on landlord-friendly states. And so just getting an idea behind why we're in those markets. If you do have a track record, we go through the track record. And then something key here that I didn't mention, and this will actually come up in this comes up in another call and actually another webinar that I hosted, and there's going to be a replay there, but it's track record, but then what is an obstacle that you went through? And well, you know what? I'm actually not even going to, I don't want to dive down that rabbit hole, but just talking about the track record that we currently have, and then why people are going to be investing with us and figuring out, what's our pitch. But once you get through that and you sort of just gain this understanding of who we are, then we went down into the details of what we do and some of the just more common questions to make sure that we're up to speed and then can understand all aspects of the business and the deal structure. So we would go through the equity waterfall. I mean, the return terminology and how often distributions are being distributed, the fees that we have and how are those fees taken, financing. I mean, of course, financing is going to change for every single deal, but just to get a better sense of how these deals are financed, and then frequently asked questions, but then also within the details too. These are two books that were, I mean, I've I've already read Pitch Anything when I started, but then I dove into the Hands-Off Investor. I was reading other books, but I didn't get a chance to read the Hands-Off Investor. But this book by Brian Burke is probably one of the best books out there in terms of like learning about syndications and being able to articulate different aspects to a passive investor. And so these are the two books that were resources to to help catch us up to speed a lot quicker. And so it was on us to be able to read this and then apply some of these principles here. So Pitch Anything, that is just the story of the pitch and how you can how how the how the brain processes information and how you can get your message across better. Hands-Off Investor is more detailed and into just the actual space and what all this terminology means. But once you get through all of this information on the left side, then is the uh then's the fun part. Then it's just get your reps in. So from the time where I was shadowing calls and then going through role play with the other IR associate and going through just uh and just learning the best practices of what's going to be on a call. It probably took me, let's see, I want to say it was like 3 to 4 months to be fully ramped up after just listening to calls. And so what would happen is well, actually, what would happen? Oh, he would just chime us in. So he would just include us in the call, but we would of course mute ourselves, and then we would just listen in the background to all of the different calls. Just at the time, we were getting a lot more calls, um, just because it was a more favorable market, and so we were on like 5 to 8 calls per on. Let's see, it was for for many days. Let's just say, and we just heard it, practice it ourselves, heard it again, practice it ourselves. We use this uh, application called Rev, and it's just a call recorder. So if you just wanted to listen back to your calls, that's the best way to do it. I will say though, if you are to use Rev, make sure that you go into the settings and toggle the option to to not tell the other person that they're being recorded, because I remember another friend of mine did this, and they were using Rev because they wanted to just hear their call back, and then all of a sudden the call started with, "This call is being recorded," and then the other person on the line was like, "Whoa," and started going on their heels, and it wasn't a great call after that. So there is an option to toggle that off. You just have to make sure you go into their settings and do that. But when it comes to calls, though, I mean, that is a whole other subject. I actually did another Multifamily Investor Nation webinar on best call practices and even just the structure of the call. Because I mean, we were doing that time and time and again, but I'm going to see if Talia, well, actually, you know, at the end, I'll go find the link and then I'll put it in here so you guys can take a look there as well. But definitely not enough time to cover just the entire call section. But those are best practices for the call, because call is going to be like what, 80% of your time, 70 or 80% of your time. It's going to be a large part of your time. Then after we went through the calls, I mean, these were all kind of in tandem, in parallel. We learned best practices for data input. So what happens after these calls? Were we logging them in ActiveCampaign? Were we logging them in HubSpot? What were the necessary information that we needed to input in order for us to keep track of our database? And then email responses as well. So something that we use, so we use Outlook, but then we also use this other platform called Front. And in front, instead of having to forward, excuse me, instead of having to forward, let's say, emails to somebody else to try and get a response, you can actually just tag another team member, and they can see it without having to just send a ton of emails. So with fronts, that I remember my former boss would he would get a he would get an email from an investor, and then he would tag me or the other investor relations associate, and he would say, "Hey, put a draft up for me, and I'll review before we send." And so this was during our time of practicing calls. And so what this, I feel like it's pretty self-explanatory. I just got my reps in order to learn how to respond to investors, seeing what people were asking for, how most frequent questions to, and it really just got me to, I guess, to practice my writing, but then also practice how I want to articulate information to when I do go out on my own. And we were, shoot, even till this day, we're still drafting responses and making sure that it's okay. So that was more of just like an ongoing thing. But I think it's just a great platform to utilize. And then also another part of our onboarding process as well is compiling all our different resources and knowing where our resources were. So we use Airtable to track our raises. We use IMS as our investor management portal. And this is where investors can track their returns. And so navigating and figuring out how to go and check who's invested in what. And then this one, passiveinvesting.com, we needed to familiarize ourselves with what type of educational material that we had out there. Because oftentimes when we do hop on a call and let's say there's somebody that doesn't necessarily know something, and especially since I was new, I didn't know everything either. And let's say I wasn't the best at articulating something. So like the biggest one that I had trouble articulating was the IRR. And earlier on, I would say, hey, well, it wouldn't be something along the lines of that, but I would send them an article of understanding the internal rate of return. But I had to know that because, well, I went through our resources section just to see what else we offer and making sure that our messaging is aligned. And then, so familiarizing yourself with resources, frequently asked questions, and just where everything was at within our system and our structure. And then last, did I say more calls? That is the most essential part of this whole onboarding process, is trying to role play and shadow calls and get on calls as much as possible in order for a person to be fully ramped up. It sucks because I remember when I first started, they tried to ramp us up really, really, really fast. I think it was even within like the first 2 or 3 weeks. And then I remember the other investor relations associate and myself, we got on just a few calls, and then our former director at the time heard it back, and he just pulled us off the phones because he just saw that we just weren't ready. And so really don't rush this process. It's going to take time. And I'll go into that a little bit later as to why you shouldn't rush this process. But before we go into that, some other key responsibilities that comes up. And I also understand that investor relations, it's it's sometimes different across several different teams. So there is, like, sometimes investor relations includes a lot of investor services actions, or how we define investor services. So like coding the PPM, signing and tracking PPMs that are being signed, tracking funds, whether it's coming via wire, via check, and making sure that that's all checked, the accreditation verifications and how we're handling all those letters, and then even also portal access as well, and setting up the portal. I personally don't do that for investor relations, but I have heard of smaller firms that sort of combine the investor relations and investor services position, since they are smaller and they're not dealing with this many investors. So that could be other responsibilities that comes up. Monthly and quarterly reporting as well. So our monthly updates, our director takes care of it. And he's in charge of doing the monthly updates and then also making sure we have the quarterly financials for all of our deals. Now, if you're a smaller firm, you're probably going to have to do that as well. It's just something that I don't necessarily touch. Let's see. Conferences and events. This is also a pretty big one too. So we go to several different conferences, whether that's exhibiting or whether that's we're exhibiting or just attending. Or even hosting dinners or happy hours. So the willingness to travel is a huge one. I'm probably traveling. Uh, it's seasonal because there's certain points where I'm traveling about 50% of the time, and then there's also certain like months where I'm only traveling, let's say once per month. But I would say you're probably just traveling once per month and just being prepared to do so. Uh, whether that's within your area or going across to several different conferences, in-person meetups, like local meetups, going there and trying to build a local presence. I mentioned traveling, speaking on webinars, podcasts, speaking at meetups, writing blog posts could also be another responsibility that you have as well. Where I guess I've also seen investor relations positions tie in with marketing too, where along with, let's say, updates, you're filming videos and you're filming webinars for your investor database to be able to understand certain topics. But excuse me, at the end of the day, what it's really what you envision this investor relations associate position to be, because the investor relations associate is an extension of you and your brand. And why it took 4 months just for us to get on calls, it's because you want to make sure you get it right. You've come this far to where you don't want somebody to mess up your reputation, and you don't want to have that bad first impression as you are going to branch out. So spend time to get it right, because you've come too far to be misunderstood. But yeah, I know that was a lot of content. I wanted to try and compress it to as much as possible and make sure we have enough time for questions. But now we are going into questions. I see some here coming up in the chat. Let's see. Oh, nice. 3. Oh, stressed out looking for the webinar link. 1 score. Yes, it was 1 score. Thank you, Emily. 1 score was the personality test that we used. Curious to know if they still use a personality test at that same stage and what's being used now versus when you're hired. Yeah, that's another great question. Let's see. Ooh. Well, I mean, to be quite honest, we haven't hired in a while, but we are going to be hiring coming up here pretty soon. I think it is going to be dependent on, it is going to be, yeah, yeah, I don't see why we wouldn't, because it totally works. I just don't know if we're going to be using 1 score or not. I mean, even, and not just within IR and within real estate, I have heard of several other companies starting to do personality tests too, just to make sure that they're fitting in with the work culture. Is there an active job posting on LinkedIn for the position? No, unfortunately not at the moment. But keep an eye out though. There might be one soon. How do you manage who handles the conversation? Do you make a first do you first make a 15-minute intro call, and then if it fits, pass it to your director? Yeah, another great question. The passing it to the director, it's it's only, let's say, when there is a need to pass it to the director. So on that intro call, I essentially want to be the main point of contact for them throughout their entire investor journey uh, at passiveinvesting.com. I mean, of course, they can reach out to, let's say, Rob or the managing partners, but I want to make sure that I'm communicating with them and it's just easy and streamlined there. The only time where I would, let's say, pass them to another director is if there's certain questions that I wouldn't be able to answer. So like I remember starting out, this guy asked me some questions that I remember this guy. He asked me some questions that I had difficulty responding to. And they were great questions as well. And so I brought in my director to be able uh, to have a conversation with him. And then when he did have the conversation, I would study and learn and listen back to how he articulated that information. So instead, I didn't have to pass it to the director. Now, in certain cases where I'm always going to pass it to the director, if someone's trying to co-GP with us, if somebody is trying to 1031 and they're on a strict timeline to finding another deal, and to identifying a deal to 1031 into, and depending on when their sale was, and then let's say if it's a large amount and they're looking for other terms. I did pass the conversation to the director a little bit more frequently in the beginning, but then now not so much. I'm going to stop sharing too. Great question though. What is the ultimate position for an IRIS associate, and how it relates to business development? Ultimate position, do you mean, like, can you describe ultimate position? When I think of ultimate position, I think of like the final boss, like the like what you can scale up to. Ah, yeah, yes, okay, final boss. All right, yeah. So for an IR or an IS associate to move up, I mean, there's the director of investor services, there's director of investor relations, but as you start to grow, you can even go on the regional side or senior associates, senior IS associate, regional investor relations associate. So I think there's a lot of different ways that you can create a growing structure for them. But it's going to be director. Or actually, you know what? It's director, but for director of investor relations or director of investor services, but even one up past that is, let's say, managing partner, where you're overseeing investor relations, but you're also now overseeing investor services, and then marketing too. So that's like Dan. That's Dan Handford. He's our guy. But at that point, you're just managing partner. You're not even an associate. Great question though. I always like to stay on here for a little bit longer just in case anybody has any last minute questions. I hope this was helpful though. I know this is something that, well, I haven't seen too many people talk about or even host webinars about. Let's see. Yeah, of course, Nicole. Thanks for coming out. What level of finance do you need to know to sell a deal? Yeah, that's a great question. Because I don't want this to sound snarky, but it's just like enough to know it. Like for the 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 basics at least, but better than the basics though. I don't know what you would even say. You would just need an advanced set of knowledge just to understand the deal and the different levers to be pulled. Now, do you need to learn how to underwrite a deal from start to finish and know all those different levers to be pulled and know how to model a sensitivity analysis? Not necessarily, but you would need to know how to read a sensitivity analysis and know how to read what kind of levers that, let's say, we are pulling, and uh, how these different, I guess, aspects of the underwriting connect. Um, you know, what's, are the, yeah, you just need to know, you need to know enough. I'm sorry, I'm totally blanking right now and just trying to articulate it. But you would just need to know how to read, let's say, an underwriting model. What are the hardest questions that you received from a potential investor? Ooh, yeah, that's a great question. Hardest question. I wouldn't, that's it's hard to justify what is considered the hardest question. Just I think that a better way to describe it is just harder conversations. So the because like I can have an answer to several different, let's say, several different questions, whether, like, have you guys ever had a capital call? And then you say, I mean, you can say no, and then you can say, but, it's not like we're perfect operators either. And we go through our own obstacles as well, as seen in this deal where we wanted to raise rents this much. And then uh, we tested it out in the market and that didn't work out. And so then we brought it back and cut our renovation costs. And it, I would say but that's like an easy answer because you have a story behind that. I think the part where it gets difficult is, let's say the deal isn't performing well and it's not performing per the pro forma, and you're behind pro forma. Let's say you had deposit distributions. I know a lot of people have pause distributions during this time, just to make sure that they're well reserved moving into this economic environment. And the difficulty is being able to still have that conversation and still also maintain that level of transparency, no matter, you know, how tough it is to deliver the message. I would say that is the most difficult part about it. Uh, and then figuring out how to respond, and not necessarily lie, of course, but, making sure and giving them and supporting their trust in you with their hard-earned money, that you're going to be taking care of them and acting as fiduciaries with their investments. So, I mean, at this point, I know, long-winded answer to say that there's not really like a really hard question. I mean, everything is eventually learned, whether that's like, oh, what's the I don't know, what does this mean, or what does that mean? And you'll get that over time. And right now, like, we don't. I mean, I get a lot of the same questions. If you go through if you go through the webinar that Talia linked in the chat box, it can definitely go more in depth to what those frequently asked questions are. But yeah, that's such a long-winded answer that I hope made sense. I kind of went on a ramble there. All right, let's go back. Recently started a real estate business focused on syndication. Wondering any tips to help get a deal done. Currently going to networking events and building my network relations, but don't know where to look as well. Yeah, so let's see. That's a very loaded question, because in terms of getting a deal done, now it's a matter of what you bring to the table to a partnership. Because if you're in the Bay Area, I'm not sure if you're going to be doing deals in the Bay Area, but let's say you're doing deals out of state in another market, you would have to find those partners within those markets and then bring them enough value to then get a deal done together. Now, I mean, I don't know if you're going to be okay, so out of state. So in that case, building out your network, are you going to be more on the capital raising side or on the acquisition side? I mean, I can imagine acquisitions is a little bit more difficult, just because you're going to be going out there and meeting with brokers and trying to maintain face and building those relationships out, which just takes time. But I can imagine it's more on the investor relations side. Since you're on this call, um, the uh, yeah, it's tough. I guess my follow-up question is, how are you building your network out of state? Because that is going to be where your key is. Kind of getting into acquisitions. Okay. Capital raising, kind of getting into acquisitions. Yeah. So, I mean, it really would just get down to building those relationships out of state and keeping in contact with those, and even having possibly even a boots on the ground for what you're going after. I don't think there's any other way that you can do it unless you were going to move. Which, like, for me myself, I didn't want to move out of California, despite how much I love high taxes and and the great policies over here. I just got a lot of family over here. But yeah, you would definitely to try and build your network out of states. When it comes to building your network out of states, what I found that was best, and this is how I got my start, was starting a podcast. If you started a podcast, invited people out of state, let's say particularly in the Dallas area, or if you know somebody that is investing in Dallas, they could possibly, I'm just using Dallas as an example, then they can refer you over to other people that are also invested in Dallas. And so it really starts with just one conversation and trying to branch off from there. And then of course, because the point with building your network is you want to stay on top of mind and making sure that they don't forget about you when it comes to, let's say, a deal comes across the table. Hope that helps. I'm going to go through other questions, then I can come back here. So what is a sensitivity analysis? Yeah, so for multifamily, a sensitivity analysis is a sensitivity analysis is just a range of what your returns, let's say, could be based on the cap rate movement. And so when you have your entry cap rate, so like you buy a deal at a certain cap rate and then you model, let's say, an exit cap rate at 50 basis points at the end, there's typically a sensitivity analysis that's going to be there to highlight if the market gets worse, let's say cap rates go up, and the market gets better and cap rates go lower. That one just really highlights if the market gets worse, this is what you can expect in terms of your returns. If the market gets better, this is what you can expect in terms of your returns. That's the most common way I've seen sensitivity analysis, but it's really more just like a stressed test. So like some other people should do sensitivity analysis of interest rates increasing. So like if interest rates increased up to 15%, we would still cash flow, but if it but this is what you can expect if interest rates dropped down to 2%, which I don't think is going to happen, but we can all hope. What is the best preparation after a deal is assigned to get ready for the calls and to raise capital? Great question. So a call with the underwriting team is one. If you do have an underwriting team, or a call with the underwriter just to paint the story of the deal. And then if you are doing the webinar, I mean, well, actually, that's a follow-up question. Are you doing the webinar or is somebody else doing the webinar? You're doing the webinar. Okay. Yeah. So the nice. Thanks for coming out, fellow IR associates. Fist bump. So in preparations, so getting the story of the deal. So how we do it is we intro and honestly, I can actually send you what well, I mean, I guess if you're already doing webinars, you already know how to do the webinar. But in preparation of the webinar, okay, my mind's going into a bunch of different places. Let's backtrack here. Deal gets launched. We go with the underwriting team, and we understand just the components of the deal. And then, while understanding the components of the deal, we first reach out to our VIP network before we actually release it out to our entire investor network. Once we reach out to our VIP network, we release it out to our investor network, and then we schedule for the webinar. Once the webinar happens, we're fielding questions afterwards, and then we're seeing who clicked and having follow-up conversations after that. But before that webinar comes out, and also like as you're creating the webinar too, you're really just creating the story of why this is a good deal. Because at the end of the day, I mean, everybody can write, 2x equity multiple. Everyone can read the average cash on cash return. But they really want to know the story of the deal. And if you can paint the story of the deal and why it is advantageous and why it is such a great deal, that is just the key to then, let's say, raising capital. Yeah, I hope I answered that question. Maybe I can dive into it a little bit more if you had any additional questions there. I don't know if that was a little bit too broad. Let me know. And I can dive into our processes a little bit more. Everyone's using the chat box and not the Q&A box. Nice. Okay. Yeah. So if you're having, yeah, so if you're having more one-on-one calls, then um, in preparation to do so, best way to prepare for it, aside from, this is before the webinar, before the webinar, right? Or I guess this could also be just in general. Because if you are having just a one-on-one conversation with the call, or like, let's with the investor, and this is already after the discovery call, I mean, of course, it can get more granular. So they're going to be asking. So we just sent a one pager with the deal, and then get on the call with the interested investors. Yeah. So when you go on there, I mean, you can have that high level pitch just of the deal, and then you can open it up to questions. And I think one thing that you can definitely highlight is just the conservative underwriting for the deal. Um, and also just the market fundamentals within that deal. So, because it's hard to model the entire conversation because so many investors ask for several different things. Like I've hopped on calls with investors and they don't necessarily. I mean, I've had some ask about the debt service coverage ratio, but not all investors ask about the debt service coverage ratio. I've had some ask about how much we're modeling for rent growth and expense growth year over year, but I haven't had a lot of other investors ask about it. Honestly, a lot of the investors, once we do send it out, I mean, they've already built some familiarity with us in our group, and so I guess that's a little bit of a different story. And not saying that we don't go into detail within it, but I mean, I don't like this answer, but I feel like I have to say this answer. Is you just have to be prepared to answer all of the questions within the underwriting or even just within the PPM and just like how those fees are taken out. Um, yeah, yeah. If you want to have a follow up conversation too, yeah, exactly. It is going to really depend on the type of investor, whether that's you know, a retail investor isn't going to ask any of this stuff, but an institutional investor, I mean, you'll definitely get into the weeds and get into the calculations. Um, but yeah, if you want to have a follow up conversation too, happy to have a follow up conversation. If anybody has additional questions, I probably should have put my name here earlier. Oh, you guys know my name. What am I doing, Taylor? Here's my number. And then you can also find me on LinkedIn as well, or you can shoot me an email, Taylor at passiveinvesting.com. Happy to help.